Good morning, traders. Today we want to discuss practical Elliott wave tips and tricks. All right, so you have been using the Elliott wave theory, and you want to add more effective Elliott wave tips and tricks to your trading arsenal. This is your day. All right. So, by the way, I want to thank traders for their interaction at 24 Elliott Wave. You are catching up with Day Pro Trader YouTube subscribers. Congratulations, traders. All right. So, I'm happy about that. All right. Let's move on, please. Okay. So, what are we looking for? Talking about practical Elliott Wave tips and tricks. So, the first thing that we want to do, all right. So, as an Elliott Wave trader, you want to count Elliott Wave. You want to identify Elliott wave pattern so you may time the market accurately. So the Elliott wave principle allows traders to time the market correctly. So you want to know whether the financial instrument is about to go up or down, or whether the financial instrument is in a corrective phase or is he in a trending phase. This is very important for an Elliott wave trader, so he or she may come in the market at the right time and also at the right place. The Elliott wave principle also allows traders to manage the risk. I will be recording a video about how to use the Elliott wave principle to manage the risk. All right. So, as an Elliott wave trader, your mindset is completely different from other traders. You do things differently, and you don't want to know about stochastic. You don't want to know about MACD. You just want to use the Elliott wave principle. So, last time I recorded a video about how to become a clever Elliott wave trader. All right. So, we are getting a message out. So, I hope traders are taking into consideration those messages and will try to improve their Elliott wave trading. All right. Talking about Elliott wave tips and trick, practical. All right. So we want to count wave. What is the first step that we need to take? All right. One thing I need to say to Elliott wave traders: the price will always, usually bullish trend, will start from a support level. All right, this is very important to understand. So usually the motive waves, okay, will begin from a key level, from a support level. So in a downtrend, we will say that the bearish impulse wave will start from resistance level. All right. Sometimes an Elliott wave pattern will be a little bit distorted due to those factors. Price start heading to a better support or resistance level. So you count your wave, you say, oh, something has changed here. What has happened? All right, because the price is looking for a better support and resistance level. You want to be aware of that. So in order to improve, your Elliott wave trading, practically speaking, you want to know where are the key support, resistance, and trend line. I need to highlight the fact that when we are talking about support and resistance level, traders very often will just think of horizontal support and resistance level. Now, as a mature trader, don't get into that trap. Support, resistance level include trend lines. All right. So the first thing that you want to do on that chart where you are about to count wave is to draw the key support and resistance level. This will help you to see exactly what the price is trying to do. Based on the market principle, the financial instrument will go from one key level to the next key level. It's happening all the time, and the financial instrument, which is the number one indicator, will acknowledge those key level. If you look on this monthly euro chart, you can see that the price. So from this, you see, so we have this trend line by drawing. So this trend line here, by connecting this point and this point. All right, the price has acknowledged that. Resistance here, the bearish trend line here. All right. Now there is another key level for the euro dollar, and the financial instrument that we are looking at is the euro US dollar currency pair. Here there is another key level at 13879. You see here the price breaks below that key level, retest it here, and then continue to go down. This is what the price is doing all the time. So as it break below, retest and find a resistance, they sold it down to this key level. Wouldn't it be nice for an area wave trader that is counting the wave to understand that the price is going from one key level to another key level? We'll also use the area wave pattern to pinpoint reversal points. So by knowing those key levels, we will be able to make better decisions. So you see a pattern that is completed. You want to know, is it completed at a key level, key support, key resistance level, talking about horizontal and trend lines. So this is the first step, talking about the practical area wave tips and tricks that we can use. So know where are the trend lines, okay, rising channel, declining channel, where are the trend lines, okay, and where are the horizontal, okay, support and resistance level. All right, it makes sense. So usually, suppose you are, so you may see on another time frame, it may not be, okay, the price may look like consolidation on one time frame. You see here, euro dollar is consolidating between 105 and 14 and a level of 11433. All right, on the monthly chart. But if you go, for instance, on a 2-hour time frame, this move here, this move up here may look like okay, a trending phase on the 2-hour time frame. So many months, you see, 1, 2, 3, 4, 5 months, it has been going up. So on a 2-hour time frame, at least you may see like it is trending. So when you are counting Elliott wave on your 2-hour time frame or even a lower time frame, it may look to you that all right, there is a trend developing. But on the higher time frame, it is just a consolidation. All right. So looking at the key levels, where is the best place to buy? The best place to buy, because it's consolidation, is at this point here. So by knowing that the price is consolidating inside the lower part of the consolidation, all right, you will deploy the best Elliott wave strategy. So price start going up from here. On your lower time frame, you are likely to see, okay, impulsive wave on those lower time frame. Though on the higher time frame, it's nothing to do with corrective waves. It just okay. On the higher time frame, it has nothing to do with an impulse wave or multi wave. It's just a correction. But on your lower time frame, you know what is happening. Though it looks like a trend, you know that okay, all right. Okay, it's a consolidation on the higher time frame. That's why we say to traders that do not use one time frame alone when you are counting the wave. Talking about the wave validation, we use different time frames to validate our Elliott wave count, especially those who are scalping with the Elliott wave, those who are day trading with the Elliott wave. Even some traders that are swing trading only on a daily chart, you want to be aware of that, because an Elliott wave trader may go to the daily chart, start counting wave, things will look beautiful like an impulsive wave, but on the higher time frame, it's just okay. Okay, a correction. One example that I can give you here, you may go, for instance, on the 2-hour time frame, and then the price may go like this: 1, okay, 2, all right, 3, like this. Okay, so you see on the 2-hour time frame, you see first wave, second wave, third Elliott wave. All right, because you're on the 2-hour time frame, you don't know that the price was consolidating on a higher time frame between this key level and this one here, this one and this one here. So at this point in time, you are thinking that okay, we will have okay a 4th wave, followed by the 5th wave, because the structure of the first, second wave, and the third wave did not violate okay, the Elliott wave principle. You are expecting that the price will continue to go up, but the price is already at the top of the consolidation. But because you did not know that on the higher time frame the price is on top of the consolidation, you will be expecting a little bit pullback and then up. So as you pull back like this, you are just thinking that okay, it's going to go back up, but it's not going to go back up, because it's returning back to the station at the lower part of the consolidation. All right, so you be aware of that the wave count is fractal. All right, so you see on one time frame, you want to check the higher time frame, and so on and so on, and know exactly what the price is trying to draw on the chart. So by knowing where are those key levels, you are counting wave on any time frame, draw the key levels, especially on the higher time frame. Like now, if I switch to the, as I'm talking about 2-hour time frame, Hopefully not much. I didn't see many of my lines. Okay, go to the daily chart. You see my lines are here. All right, so this move from here to here, if we go to the 2-hour time frame, you may see that it may look like it's trending because the price will be in a rising channel. All right, it will be in a rising channel, something like this. Okay, and you will be thinking that it's a multi-wave and there is a trend in place. So draw the key levels on your chart. Okay, all right, it makes sense. This will help you to understand what the price will do. Another thing that I will go back to my monthly chart. Okay, you see how the price is breaking below key level. Retest it here and now. Okay, so because you know the key level, you know that okay, if they are selling, they will prefer to bring it to the next support level at 12196. So as you are counting your Elliott wave, you want to see whether everything is aligning carefully, and also this will allow you also to know whether there is a distortion or not, because a pattern may be formed above this key level, but as the price is trying to retest this specific support level, you may still think that your pattern doesn't make any sense, but it makes sense. It's just because the market is trying to touch a specific key level. So you want to know what is the price doing. The price is always moving from one key level to the next key level. So in order to count Elliott wave correctly, all right, even whether it's an impulse wave or a corrective wave, you want to know, okay, where is this happening? Usually, my friend, talking about practical Elliott wave tips and tricks, we are likely to see, like you see here on the monthly chart, the price is consolidating. We are likely to see when the price is consolidating like this on the monthly chart, like on the daily chart, we may see a lot of corrective waves. All right, but when you go a little bit deeper, it may look like impulsive waves on another time frame. But generally, when the price is consolidating on the higher time frame, and we go to a lower time frame, we want to focus on specific corrective wave, because a consolidation is a correction, and it makes sense that when we go to the nearest lower time frame, we may concentrate on corrective waves. All right, it makes sense. So you need to be aware that the price is on the higher time frame is consolidating, and when you see, okay, a multi-wave, you want to put a question mark on it and know that this is a temporary, okay, a multi-wave, a temporary impulse wave on the lower time frame. So you do not make, okay, mistakes like this, price going on 1, 2, 3, and you are expecting your fourth wave followed by the fifth wave, and you will see that the price may just go 1, 2, 3, and then it just stopped. You see here, as it went up, boom, 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 up, okay, and then it pulled back, and then it went up again to touch it here. So somebody, for instance, a very new Elliott wave trader, probably on a daily chart, may say first wave. All right, it may look like on a daily chart, even this is maybe, let's say, 2-day chart or 3-day chart, because you're the monthly chart, may think that it's the first wave and then second wave, expecting that he or she is catching the third Elliott wave that will be extended. You need to be aware of that. But if you already know that the price was consolidating between 13879 and 12196, you will not be too keen to expect the third Elliott wave at this point in time, because you know that it is consolidating, and you will be very patient. All right. Another thing I want to say to you, talking about complex Elliott wave. Do you understand what is a complex Elliott wave? Those are waves that are extended with many, okay, internal waves. So, for instance, we know that all impulse wave can be subdivided into 5 mono waves. So, another thing to understand, the reason why sometimes we have the price going like this, so instead of having a straight line, okay, first wave like this, or a straight line a third Elliott wave like this, or a straight line, okay, fifth wave like this, you may have what we call a complex, okay, first wave, third wave, or fifth wave, when that impulse wave has been subdivided into a phi. One of the reasons why we see that very often is because as the price is going up, is acknowledging key level. So the second wave will end at the end of one support level, and then we break above the next resistance level, and then continue to go up, and then pull back again to retest one key level before X going up. So instead of having a straight line impulsive wave, the price has to acknowledge a few key levels before going out of the resistance zone or the support zone in a downtrend. So for instance, as we are here now, suppose you are here, you are expecting a third Elliott wave like this. In my view, the best way to think is to think that if we're going to have a third Elliott wave, probably it will be a complex wave, which means the price will go up first move like this, which will be the first minor wave of the first wave, all right, and then we'll pull back a bit, which means the price will acknowledge this resistance, and then get out of, and then break above that resistance, and then maybe come back here, all right, retest, okay, this key resistance level at 14972, and then before going up. So traders have been asking me, okay, how do you know the end of a corrective wave? One of the best way to know, okay, whether you are is going to be a complex correction or a normal correction, what we call regular corrective wave or irregular corrective wave, all right, is because the price is acknowledging key level. So as you are analyzing the chart and you are, okay, pinpointing the wave pattern, you may notice that your pattern may go from one key level to the next key level, and you can have a bit of idea, okay, because of other key level ahead or below or above, you may have a bit of idea what is likely to take place. Sometimes one can expect a complex wave, usually in a bullish trend, price acknowledging different key level. Especially you see, as I was telling you last time about the first Elliott wave, trading tips and tricks, the resistance ahead, okay, trend line, key resistance. So for the euro dollar, it's consolidating now, all right. So if it start going up, okay, where are the key levels? So these are the practical, okay, Elliott wave trading tips that you want to know. So the euro dollar is consolidating between 11433 and 10514. So what is going through the mind of Elliott wave traders, all right? So on a lower time frame, all right, we will expect it to look like a trending from 10514 to 11433. Once we reach that level, we must come out. So our expectation as we reach the top of the consolidation is that probably it will start going down because people will dump it and the bearish trader will try to force it down. All right, so from one key level to the next key level, this is how we want to trade it, because a consolidation is a different small trend in between the two price levels. We see here a trend. The price was trending up, if you agree, and then it trend down in a short period of time. Okay, all right. Oops, I moved my line. So if I'm quoting a different number, don't be surprised because I moved my line. And then it trend down, okay, and then it trends up again, okay. Now professionals are trying to sell it at the top of the consolidation using a top-down trading method. Right. As an Elliott wave trader, you want to know what is the price doing, where is it heading from A to B, from B to C, and so on, so you may know exactly what is taking place, whether you're going to have a complex waves, all right, or corrective wave. What should you be giving priority to? So if the price is trending on a higher time frame, we want to give priority to, okay, impulse wave, trying to catch impulse wave on the lower time frame. If the price consolidation, we want to pay attention to corrective waves, okay, on the first and nearest, lower time frame. So by drawing the key support and resistance and trend line, this will allow or prepare. This is a kind of preparation, okay, to know, okay, where are we going and what is likely to place, whether there is a distortion or whether we will have, okay, a complex wave or not. All right. So be aware of those things. You see again here, the price as it went up. Okay, see here, it went up from this key level 1 to 196, and where did it go? It go to this level. All right here. So if you see a corrective wave here, you want to buy, you will be a little bit careful. All right. So those are just few things you want to be aware of instead of just trading blindly the Elliott wave without knowing where are the key level. So the best strategy, you see here, the price went up one, pull back a bit, and then went up again. And then it acknowledges this key level at 13879, and then it pulled back near which level? Look at that. The media line of that channel, the media line of the orange channel. So will that be helpful for somebody who is counting Elliott wave, for instance, on the 2-hour time frame, or on the 4-hour time frame, or even on the daily, on the hourly time frame? It will be useful because you know what is the price doing. So it went to the top of the consolidation, start pulling back. Our expectation is that it will continue to go down, all the way to the lower part of the consolidation, but we know that some trader will take profit near the media line. So you may notice that the price went down, minimum price move. For instance, from here, it went down. If you went down 1, 2, 3 near the media line, we will say that minimum price move is free. That would be a good place to apply that strategy. Okay, yes or no? So you see, minimum price move is free. It's now near the media line. Let's see what will happen. So we will say priority to bullish signal above and priority to bearish signal below. If a reversal is taking place, or we see a reversal pattern here, or we see another zigzag pattern from the top to the media line, we will give it a consideration because the price went down from the lower part of the consolidation to the top of the consolidation. Now it come down 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, ended exactly near the media line. So in that case, we'll draw that warning line. We'll say priority to bullish signal above, priority to bearish signal below, and then we will take it from there. And then the next key level we want to watch is again the top of the consolidation. You can see that this candle here has a tail, all right, because it went down a bit. So by knowing those key levels, all right, we will improve our Elliott wave trading. The reason why we have recording those type of video recently is because I do care about Elliott wave traders, and those traders are smart traders. I like them, in fact, because those traders know how to look at the chart. So other traders that are using technical indicators do not look at the price action. But Elliott wave trader, typical Elliott wave trader, all they do care about, they keep their eyes on the price action, which is very, very important. All right, but most of them do make mistake because they learn the Elliott wave. All right, they understand it, they accumulate that knowledge, they assimilate that knowledge. All right, now in order to translate that into excellent, accurate decision, they forget few things, and this is one of them here. Okay, the key levels. Okay, and to know what is happening now. Does it make sense? It is also powerful. All right, it makes sense. Yes or no? It makes sense. All right. So you can see here also as another thing I want to mention to you before I forget. Stay with me. Stay with me, my friends. Stay with me. Stay with me. All right. So another thing that I want to bring your attention to, all right, because we want to polish our Elliott wave trading. All right. Another thing I want you to understand is that when we are using the Elliott wave, we can use Elliott wave in conjunction with market geometry. So I talk about the key levels. So now we can see on my chart for you, I know where are my key levels. So I've been telling traders recently, know your trading setup and trade your trading setup. The next thing that I will start saying to you now is that know your key levels. So apart from knowing your setup and trading your setup, the next thing that the professional know is that they know their key level. Do you know that professional most of the time only pay attention to key level? So they will say, oh, the euro is now at 11302. Probably they are in the garden somewhere having a barbecue with their friend, and they check on their smartphone. They know that the euro is at, all right, key level 11302. They know that it's the top of the consolidation. As an Elliott wave trader, all right, suppose you are trading on your smartphone, which you need to be careful. I will talk about that. Those who are trading in their workplace, all right, yeah, you are in front of your computer, and then you're looking at your smartphone, okay, to pinpoint some trading activity, all right, when your boss is not there. I know you are doing that, okay. So the problem is that on the smartphone, we don't see the bigger picture as such. Doesn't matter whether you are using iPhone 6 or the big Samsung phone. It's not exactly the same thing like the desktop. All right, I will talk about it another time. Okay. So though it's useful, all right, but it's not exactly. So as you see that the euro is at 11302, all right, on your smartphone you can go, for instance, to the 50-minute time frame, looking for what? Okay, a terminal pattern, all right. Flat correction being formed in the vicinity of this key level. That would make sense. So you see price went up, and now we see a flat correction in the 50-minute time frame. All right. So because you know the key level, you know that it's a resistance level. All right. So know your key levels. Very important. Know your key level. So what you can do, just have like on your smartphone, key level for the euro dollar, just put it down, okay. I don't have my smartphone with me here. There's one nice application that I use. I can so just note it down. Key level for the euro dollar: 10514, 11302, 12196, 13046, 13879, 14972. That's it. And you want to trade around those key levels. And you know that it's a red trend line somewhere near the 13046. Okay? Those information are important. So before I forget, is that when we are talking about the key level like this, another thing that we can use is the projection of the channels. So for instance, you see here the euro, this is about the market geometry. The euro is consolidating between these two levels. As an Elliott wave trader, you want to project that, the width of that channel onto the downside, and then draw a line in that zone at 98.09818. It's another key level below. But if you do not know about market geometry, you may not know that there is another key level there, because you'll be thinking that the price never been to that zone. But by using market geometry, you can project and know those key levels. All right. Another thing that you can use is the Fibonacci extension. Price went down from here, from here to here. All right, we can use Fibonacci extension, all right, to know where are the hidden support and resistance level. And as an Elliott wave trader, Elliott wave architect, or financial market surgeon, all right, we know that if it's going to go down, if it's forming a pattern, all right, that pattern may end at a specific key level. You'll be surprised. So check it out, okay? Check it out. Whenever you count wave, okay, draw. Suppose you see a zigzag, okay, a zigzag pattern, all right. A zigzag pattern being formed, and you have clearly identified it, all right, and it goes like this, okay, and then you see, okay, 1 2 3 4 5, 1 2 3, 1 2 3 4 5, okay, so now the pattern is completed, yes or no? So you draw a line there. Now check out whether the zigzag pattern has ended at a key level. Sometimes it may not end. That key, the best key level may be below, which means your zigzag pattern may be a little bit distorted. So you may say, George, I'm getting a bit confused with my wave count. Don't get confused. Understand, okay, what is happening, all right? Don't get confused. So as the price reaches this level, you see your zigzag pattern, all right? And then the professional play game with you, your zigzag pattern is a little bit changed because of economy news. Price went down a little bit down to the beta support level. But because you are a smart Elliott wave trader, you know where the pattern has ended, and you recognize that there was a bit of exaggeration because of the beta support level below. Is it making sense? So all I want to say to you is that when you see a pattern, right, on any time frame, the pattern very often, if it's a good pattern, will end at a specific key level. Doesn't mean that because it reached a specific key level, therefore your wave count is correct. But you want to trade around your key level. Know your key level, not only horizontal support and resistance level, but also trend line. But as you have drawn those trend lines, as I do it here, project them, okay? Project the width of your channel, okay, up or down to highlight either hidden support and resistance level. use Fibonacci extension also to draw those key levels. And this will help you to understand what is happening. Sometimes you'll be surprised. Look at this one here. Hopefully it will make sense. You see the price went down. So you are counting Elliott wave. Okay, you count it up to this point, all right? Okay, and then you project the width of the channel down, all right? So by projecting the width of the channel down, so you count it from here to here, or you say, okay, George, I'll do exactly what you are saying, and now you are here, you want to know your next key level, because the price did not yet go below this level at this point in time. You project it down, that will bring you here. Now the price did 1, 2, 3 up, start coming down. You know that there is an important key level. That's where it stops. This will help your wave count, and also will help you to pinpoint, if you like to use Elliott wave to pick a reversal, know your key levels, know your trend line. All right. Another thing I want to say to you, talking about practical Elliott wave tips and tricks. This will help. Okay. Another thing that you can use is the candlestick patterns. All right, so you may say, George, are you Steve Nissen? No, I'm not Steve Nissen, but I understand candlestick pattern. I've been saying for years that I will record a video about candlestick pattern to blow away the misunderstanding of the candlestick pattern. All right. Now, look at the euro dollar on the yearly chart. All right, let's see how long I've been talking to you now for 30 minutes. We're going to wrap it up soon, traders. So here it is, you see, this is a bearish candle, yes or no, all right? Very bearish, all right? And then followed by another bearish. But look at, compare the size of this candlestick bar and this one here. So this was bearish, this one also was bearish. But you can see that the size of this one is smaller than it's talking about the height of this candlestick bar. This one here, the height of this candlestick bar is inferior to the height of this one. What is he telling us? He's telling us that the bearish momentum is diminishing. So, attention to the candlestick pattern. Now, in 2016, professionals have acknowledged that there is a bit of a weakness in this downtrend. Now, look, they are not so willing to buy, to sell anymore. So, the euro this year is forming this tiny candlestick bar. So, if it stays like this up to the end of December 2016, we will be checking out next year, 2017, whether the euro will start bouncing up a bit. All right. Now, what we are doing here as an Elliott wave trader, we are monitoring, okay, the candlestick pattern, and we are combining the candlestick patterns with the Elliott wave trading. So I'll give it to you on your hourly time frame, on your 50-minute time frame, on your daily chart, on your weekly chart. Pay attention to the candlestick pattern. So there is one example here. You see, this is a bullish candlestick bar, which is almost looks like a doji. It's not perfect doji. Candlestick traders, don't get upset when I'm saying things like this. It looks like it, okay? Followed by a bearish candlestick bar. This is when you have an up move to a resistance level, and then you see this pattern, a doji, followed by a bearish candlestick pattern. The candlestick traders just want to sell. They want to sell because of a bearish candlestick pattern. Remember that the bearish candlestick pattern will be formed at a resistance level, and the bullish candlestick bar should be at the right place, which is a support level, okay, horizontal support level, or bullish, a bullish trend line, okay. So here it is. So you see, all right, it's a bearish candlestick pattern. So as an Elliott wave trader, you get this information that you have a bearish candlestick pattern. As an Elliott wave trader, you draw your warning line 1 to 196, and you will say priority to bearish signal below 1 to 196. And you will be looking for bearish, okay, wave patterns, okay, and you will be expecting it to go down. This is how professional play it here. Now, it's finding a bit of support if it's still at it next year. Looking at the way the price went down, the bigger side, followed by a smaller bearish candlestick bar. Now, if this stays bullish, this is another bullish candlestick pattern. So this bullish candlestick pattern, talking about the move down and this smaller candle, will be completed at the end of December 2016. But as the new year 2017 begins, okay, we will wait for the month of January to close first. Well, this is another thing. And then from February 15, around February 15, we'll be checking out whether the euro has begun a bullish trend, provided that the fundamental are solid. All right. So candlestick bar, key support and resistance, including trend lines and market geometry, plus a Fibonacci extension, will help us, practically speaking, to improve our area wave analysis. I'll give it to you, try it, and put your comment below, because I like your interaction. Now, at 2-4 area wave, which is bizarre. Before traders were not very active. At the pro trader, they are quite active there, which I like very much. So, all right, take it out and then work on it and see what can happen. Will that help your area wave trading on a 50-minute time frame, on the 2-hour time frame, all right, and see even on a 3-minute time frame, and see whether that will make sense or not. Okay, the price is always going from one key level to another key level. This is a market stable data. So when we are counting area wave, where is the price heading? You see the blue line on my chart is a key level that we draw on the monthly chart. Here on the 3-minute time frame, form a double bottom. Here again a double bottom. Here again, here it is. You find a support, the D below it, and so on. And the market geometry is a powerful tool. So here it is. We have this smaller channel on the 3-minute time frame. Here it is. You see, this is what we are talking about. The market geometry and the wave count will help you. So we project it down, and so before you even come here, we have the line already here ready. And here it is. That's where it did find a support again, and then it bounced up. So if you are here, you say, okay, Joe, this looks like a zigzag pattern. Yes. Is he at a support level? Is he at a key level? By projecting the channel. And with that, you are ready to start improving your area wave trading. If you have any question or suggestion, put in the comment section. And in due course, I will be busy recording another video to answer your specific question. We are the TSTWSYS008 traders talking about practical wave trading tips and tricks. Happy trading to you all, and speak to you soon.